Hi, good evening. Today is February 2nd, and it was the biggest two-day jump in stocks since the election. Nasdaq was up today over 1.7%, and it was up over 780 points since the low Sunday night. It made after-hour highs of 13,509. S&P 500 was also up a lot, around 1.5%, after it broke 3,800 this morning. It sold off in the afternoon again, 20 points, and after it had a really narrow 10-point trading range for 4 hours. So we had a weak close yet again today. Meanwhile, Amazon and Google reported earnings after hours, and both crushed the expectations, and stocks were up after hours as well. Crude oil reached $55 today, making it the high for a year. But the biggest loser for the day was, of course, silver. It was down as much as 10% today, as CME has raised their margin requirements. It closed down around 9%. We talked about the danger of following the herd on silver in our yesterday's video. On Friday, silver ETF took in almost $1 billion, nearly doubling its old record for this ETF after WallStreetBets bros were targeting it and trying to short squeeze it. But of course, the house has won, the WallStreetBets revolution is over, and Wall Street won, and all the meme stocks were down huge today. For example, AMC was down 40%. It closed around 7.5 after being as high as $20 just a few days ago. And of course, the crowd favorite GME, or GameStop stock, closed down today 60% at $90. It was 500 just 3 days ago. And at the same time, all the pump and dump billionaires were promoting it together with the Wall Street Bets crowd. Today, they weren't doing as well. Dave Portnoy tweeted today that he has closed all of his meme stock positions and took a loss around 700K on it, after he has tweeted a few days ago that he is never selling. He even made it to Tucker Carlson a few days ago, as we discussed. Elon Musk conveniently went offline today to take a break from Twitter after also promoting the GameStop stock. And Mark Cuban is still telling the Wall Street Bets bros to hold if, and I quote, if you can afford to. And as meme stocks sold off today, the capital rushed back into crypto, with Ethereum making new times high and breaking 1,500. And Bitcoin was up again also at over 35,000. Everybody is back on the decentralization train after losing to the House, as predicted. And some people on Twitter are saying that lately cryptocurrency is just a leveraged equity position, as correlations with equities are high. Victor, have you ever looked into the correlations of crypto and the stock market, Bitcoin and S&P 500, for example?
Yes.
Did you find anything interesting?
No. Well, you've given an excellent summary of what happened, and I can only add what we've been saying since the beginning. Certain general principles are always applicable and are very valuable to follow. The weak should never try to fight the strong. They will always lose to the strong. The infrastructure will always come up with a way of profiting at the expense of the weak. Much better for the small investor, all these 6 million that have added to Robinhood, is to select the habitat that they're going to stay in, stick to buy and hold. It's now been 6 days since the stock market set an all-time high. It's within 1% of the all-time high. After a bad week, it always looks forward to a good week the next week. I wouldn't be surprised if Thursday is a good day. Never short, stick to long-term holdings. Don't try to compete against those who are much better equipped. The more dense the group is, the less likely it is that they'll prosper. The one thing you didn't mention is that we're having science is continuing apace, and despite the progressives' mantra, I noticed that spinach is now sending emails as to whether they're healthy or unhealthy. You have to admit that the vaccine work with 5 or 6 firms, 5 or 6 big pharma coming up with a workable vaccine was a remarkable example of what past profits and past research and the great organizations of the big pharma and capitalism, what capitalism can do. There's still the facade of tremendous violence being protected against in Washington. The National Guard is there to make man small and to humiliate all the reds. We're back to normal and de rigueur in the markets. Everything's up. Crude's at a new high. Bonds are in the 168 handle. They're threatening to go to 168, 167. We're close to a new high. Bitcoin is going up. The public has been taught a lesson, and furthermore, it's a very valuable lesson. It's like when a casino gets a new horde of investors, and all the brokerage houses have accepted a new horde of investors, and eventually most of them will lose, as those who tried to make fast money did in the past.
Right.
And we're going. This call for unity is a fake. Everything is designed to create a schism. We're going more woke every day. Every one of the potential leaders that is being proposed by the progressives is highly partisan and highly biased. We're going more woke, and as we've always said, the more woke we go,
the higher the market goes.
That's right. So
Yep. The speculative small option traders are still buying in huge numbers, as you could see from the chart from the sentiment trader. They last week alone, they increased their pace of call buying dramatically. Volume increased as well as the notional. Mostly they buy calls over puts. The difference between them buying calls versus puts is about $10 billion. And looking at this chart, it's the numbers are staggering.
one thing that's interesting is in the field of ever-changing cycles, there were a bunch of academic studies that showed that the most short stocks, the stocks that were short the most, were the worst performing. So a lot of people took those academic studies to heart, and they started out by shorting the stocks that had the greatest short interest. And sure enough, those are the stocks that they got hurt the most in. It will be interesting to see how the hedge funds that lost the most, how they came out. Usually there's a lot of friction. They had to meet a lot of capital calls, but the underlying principle of the market is designed to give the top feeders profits at the expense of the bottom feeders. That will continue apace. And until we get a new high in S&P, which would be 3856, which we're less than 1% away, things are de rigueur.
And another interesting tweet that I saw today is that both pension fund managers and mutual fund managers are very much fully invested, and they have less than 2% in cash for the lowest time in history. So
Speaking about two, I see that Dr. Cattle is recommending 2 masks again.
yes, and the CDC is going to recommend the 2 masks soon. They have already made wearing facial masks mandatory on all public transportation. So now not wearing a mask in your Uber is actually a federal offense. They haven't exactly been clear on what the punishment is for this offense, but it's a federal offense, so they could enforce through criminal penalties or some civil penalties or even fines. So it's
Okay, we're going more woke. That's good. Good for the market.
that's
All
right.
right, let's call it a day. Thank you very much.